Hey, this is Mike Swanson with Dave Skarica, and we're actually in the New Orleans airport getting ready to board a flight in a few minutes, so we're going to have to talk to you pretty quickly. But we just are leaving from the New Orleans Investment Conference where both of us gave presentations, and Dave just came out with this book, The Great Supercycle, and it's coming out right on Amazon just in a couple of days, maybe 2 or 3 days, so you can order it, buy it real quickly. But you got a pretty good, a lot of interest in the book. And you had how many copies? And you sold out completely.
Yeah, we had about 50 copies at the show, and it sold out. And actually, I had about a dozen or 2 dozen people come by my booth afterwards, asking, for a copy, and saying that it's sold out and I have to buy it off Amazon or off the internet or at a bookstore or whatever. And so I'm pretty happy with it. And one reason we're doing this video from the airport is we were so busy at the show. Mike spoke as well. I did a couple presentations, so we didn't even have time to really shoot many videos out there. And but the show went really well, and I think the content of the speech, and what's essentially I was speaking about what's in the book, is really people can really relate to it, and they understand it, and they like the themes of it. I don't think I would have sold as many books as I did if that wasn't the case.
Well, what I want to do is do a couple more videos to go and more in depth about the different themes in the book, because there's a lot of stuff in it going on, and I think it's really important for people to know about. But like one thing, just touch on real quickly. One of the presentations I gave, I told the people that about a story. I'd never been in New Orleans before, and a couple years ago I took a train ride up to New York City. There's an elderly man on the train that was from New Orleans and coming down here. And he told me something I'll never forget. He said that in life you have changes are happening all the time, real rapidly, but you never actually notice them until they kind of hit you in the face. So, like one thing, for example, when I was a kid, I used to go and rent movies. There's like 20 little video stores in the town. And then eventually Blockbuster came, and those guys went business. And now Blockbuster's gone, and everyone's renting movies on Netflix. So this is something that I was renting movies all the time, going these places, and boom, all of a sudden it changes. And the stock market and financial stuff is the same way. We get caught up in the news and all the short-term gyrations, and people want to chase after stock picks and all this kind of stuff. And the real money's made focusing on the big trends, and that's what
the book's about.
That's why it's real valuable, to read.
What happened, and the reason I came up with the concept of the book, about 10 years ago, 12 years ago, I had my first book, Stock Market Panic, published, and it kind of predicted the cycle shift. But I really wasn't concentrating on the cycle. I just thought stocks were overvalued, and commodities and gold were undervalued. So, and I did know that, for example, in the 70s, stocks were flat and commodities did well, and I was aware of these trends. But what really hit me on the cycle was, and during the 2008 crash, I saw this chart of the Dow from 1929 to 1949, and overlapped on it was the NASDAQ chart from 2000 to the present. And the 2008 crash, and the NASDAQ fell 50% like all the other markets, happened exactly when the 1937 bear market happened. Like, Dow fell 50%. So then I started really to realize these cycles and these trends really repeat each other. And of course, then by 2008, it was quite obvious the market had not done anything in 8 or 9 years. So then I just started looking back at past moves in the market. And actually, my novel book, The Contrarian Who Saved the World, talked about market cycles. And how if you go back to 1900 on the Dow, like 1900 to 1920, 29 to 49, 66 to 82, and now 2000 to the present are all time frames when the market has done nothing. And then 49 to 66 and 82 to 2000, the market did really well. And during those times, the market did nothing. Commodities and gold did really well. And when the market, did well in like the 80s and 90s, commodities did poorly. So you could see these trend shifts, like you were talking about. Something just changes, and then you realize that there's these different cycles. And what's really interesting is, and this is kind of the time frames of the cycles are amazing, because as those dates show that I just said, they all tend to be 15 to 20 years. And I think part of the reason they're 15 to 20 years is after a 15 to 20 year period of either the market going up or the market going down, people just get too bullish or bearish in a direction. They think the market can only go that one way. Like in 1982, you have the Death of Equities article, and in 2000 everyone was piling into tech stocks. So it just reaches an inflection point, and then the next great cycle starts. And again, to kind of the last thing about your story, which is, I think is really interesting, is I kind of like saw the trend shift when I wrote this first book, and gold was 300 or 400 when we met. And people were still laughing at you if you were bullish in gold.
Actually, that's why I met you, because I started getting interested in gold, and I needed someone that could teach me about it, basically.
And now you look at gold 1300, and you're kind of like, we were right. Like, it's fine. It kind of hits me. I was so for so long I was waiting for gold to come back, and now I'm just like, it's finally here.
What do you see now? The next, say, 5 years, or we'll take the next year out, and then the next 5 years. What do you think is going to be the big thing?
Well, I think, like, you look at, again, we're talking about these long-term cycles, and when I wrote the book in '98, I was looking kind of for this cycle shift. Well, kind of the theme of this book is, commodities have come up, gold has come up, the stock market's done nothing for 10 years, but we're still too early in the cycle for the shift to happen. We're probably midway in the cycle. So the theme of this book is kind of like, you want to keep being long commodities, keep being long gold and silver, emerging markets, which we'll talk about in another interview, and these cycles that have been attacked for the last 10 years, and you want to kind of like equity market as a whole, other than buying really high dividend paying stocks, it's probably going to keep in this big trading range for the next 5 or 10 years, and part of the reason is valuation. Now, these cycles in the stock market happen because of valuation expansion and contraction. That in 1982 the Dow was trading 8 times earnings, it was trading at 25 times earnings in 2000, and now it's trading at like 15 times earnings. But we're not there to where we were in '82, where we were trading in single-digit PDEs. So we're seeing the contraction now, and I think that we'll continue to see it, and then stocks will get cheaper. And the final note on the cycles is that in the second half of the cycle, the volatility in the stock market kind of dries up, but inflation...
We're starting to see that.
Yeah, inflation...
We're starting to see the volatility drop, but not the inflation yet.
Not the inflation yet. And I think we're in the early stages of that, because you have seen the commodity prices come back from the 2008 lows, the 2009 lows, quite strongly. But at some point, and this is what's the really fascinating thing, in my opinion, about the book, is I say that the cycles drive the news, not the other way around. That you look at, like, we're talking about inflation picking up, and this is when it should pick up in the cycle, right? But, and then we're talking about Fed doing quantitative easing too and all these things. So it seems like the fundamentals are now confirming where we are in the cycle. Yeah. It's just amazing how these things kind of work out.
Yeah, and to me, like right now, gold's done so well the past year or so, but in commodities as a whole haven't done as well as gold does. And gold tends to basically follow the rest of the commodities. Like in 2002, gold started up, then oil started up the next year. And to me, it looks like right now you're seeing nice bases develop in agriculture and other commodity-related stuff that looks like it's going to turn up for the years there. So I'm thinking that might be a good play to get into in the next couple of weeks.
No, I agree with you. And I think the last thing about these cycles is you're talking about that in the commodity cycle. We'll talk more about the stock market. This one we'll talk about commodities in another interview. It's interesting as all these commodities move together. So you want to take advantage of the commodities that are depressed and cheap, and then maybe not chase after the ones which are really hot, because there's kind of this rotation within the long-term cycle. So.
Well, anyway, we better take off. We'll miss the flight. We'll talk to y'all.
See you in San Francisco.
That's where we're going.